This is Business Morning, and it's a rainy day today in Lagos. Welcome, and thank you for joining us. I'm Chimeze Obi Iwago. Well, it's Friday, the 1st of March, and against marked sell-offs across bellwether stocks, the Nigerian equities market closed the last session of the month of February on a negative note as the all-share index dipped by 1.63%, largest single-day decline since January 31, 2019. Meanwhile, bullish sentiment has continued to trail the fixed income market. Yields on Nigeria's most liquid 10-year bond fell 40 basis points to 13.9% on Thursday as uncertainty eases for foreign investors following the conclusion of the presidential election. Well, let's bring in Tempo now to possibly unpack all of these for us. Good morning, Tempo. Well, we have seen some bullish sentiment in the fixed income market lately, but the equities market isn't smiling at all. What's upsetting the investors there?
Well, you're correct, Chibeze. We've seen bullish sentiment in the bonds market and, of course, the treasury bills market, and that's because we see a lot of portfolio rebalancing by a lot of the foreign portfolio investors that we have in the market. They had some kind of expectation regarding the economy and, of course, the political uncertainty that also convoluted the whole expectation at a point in time. So when the result of the election came out, we saw them now rebalancing their portfolio, moving away from the equity markets now into the debt market more. If you look at the kind of primary market auction, kind of open market operations that we saw yesterday by the Central Bank of Nigeria by way of offering in the market, we saw a real surge there in terms of the offer around the 364-day bills in the market. If you look at the oversubscription that we had there was that serious surge, and it overwhelmed the regulators to the extent that we had a huge reduction in the stop rates for the 364-day to maturity paper, which was offered by way of OMO auction yesterday in the market. This also takes us to what we also saw at the currency markets yesterday, given how the foreign portfolio investors have been participating in the market. Yesterday, we saw a real surge there in the market to the levels that has never been seen before since the investors and exporters window was actually launched in the market. I think we saw some 0.55% level of appreciation in the naira to the dollar yesterday, and that's the lowest that the market has recorded since the inception of the I&E window on 27th of June, I think 2017 now. So basically, it's the foreign investors that are really driving the sentiment. We've seen their interest in the long-term at the long end of the curve in the bonds market and, of course, at the treasury bills market. Significant bullish sentiment was what we eventually saw yesterday. We saw demand across the February 2028 security, which eventually contracted by some 43 basis points. 23rd of February 2028 precisely. That's now contracted to some 13.90%. And this contraction has been since for the past 2 days now. That's since the outcome of the general election was actually announced by INEC. We saw sustained interest in longer-dated bonds, longer-dated securities. We got the 2034, 2037, 2030, 37 securities, 2036 securities as well. All of these are key securities that have been enjoying the interest of a lot of investors, 13.8% in terms of bonds, and of course, in terms of the 2036 security, and 20 basis points in terms of the 2037 security by way of contraction there. That's for the bonds market. For the treasury bills market, bullish sentiment was seen as well. We saw demand cutting across the longer end of the curve. We saw compression around some 13.5% at the short end of the curve, and of course at the long end of the curve. At the mid end of the curve, there was less demand, and so investors had a bit of expansion in terms of the yields there. Like I said earlier, the open market operations auction that took place by the CBN yesterday was significantly oversubscribed to the tune of 1.37 trillion naira of the 350 billion naira that was just offered. We saw stop rates on that on the 364 security really falling against the expectation of a lot of investors, and that's really huge. So CBN offered the stop rates for the 364 day to maturity paper at a lower level of 70 basis points, and that's an average yield of some 14.30%. If we go to the unlisted securities market, we saw a marginal decline there yesterday, 0.55%. Yesterday, we still have the USI, however, at 735.18 points, with a market capitalization of over 500 billion naira. We've got volume at 80,195, and the value of transaction yesterday coming in at 980 million naira. In terms of the equity markets, where we've been seeing a whole lot of sell down and decline in share price in the markets. A lot of things have been playing out there, but coming in with a mix, by way of a mixed grill. Anyway, if you look at the sectors, we have just the industrial sector alone looking good yesterday. But let's look at the top line. We will have all share index declined 163 basis points yesterday, 525.54 absolute points yesterday. Over 195 billion naira was lost yesterday in the market. Sentiments for equities markets is expected to basically improve as investors revert to fundamental drivers of market performance rather than this whole political uncertainty, especially the presidential and the National Assembly elections, which had, really constituted the greater part of these political uncertainties in recent times. Yesterday, basically, we had volume really on the low side, 10% decline yesterday. But if you look at the value of the transactions that we had, it was really heavy, 97% yesterday. Months today, however, moderated, so 3.8%. Year-to-date performance, returns on the market moderated to 0.92%. If we experience more losses today, then what we will see will be the year-to-date possibly falling back to the negative territory. We had just 9 gainers yesterday and 30 losers, explaining the kind of market breaks that we had yesterday, which was really negative. Livestock did the highest gain at some 7.94%. O&O fell the most by 9.92%. But if you look at the top trade in the market, the banking sector was the worst hit, and of course, Guarantee Trust Bank topped the top trades chart yesterday by losing some 6.85%. 45 billion of units of its shares was traded negatively yesterday for a value of 1.6 billion naira, and that's what also we can say we can kind of leverage to explain how these foreign investors have been moving away from the equity market now to the debt market. In the banking segment of the market, we saw losses across FCMB, which was also one of the key companies that lost the most. I think that's, in fact, the highest loss that we have in the banking sector of the market. FCMB down 9.92%. Diamond Bank was down 7.76%. Unity Bank was also down 7%. Guarantee Trust Bank 6.85%. Fidelity Bank and Wema Bank both lost 6.38% and 5.13% each. Now, we saw sell-offs across the consumer good names as well. And, of course, that sector closed negative, 202 basis points down. Like Dangote Flour, which has enjoyed so much of traction in recent time, began to fall, 8.7% down yesterday. Honeywell Flour was also down 5%. USCN down 2.3%. Nigerian breweries, in spite of some good dividends being declared there or being proposed for investors, was down 4.45% yesterday. Insurance segment, ICO, we saw ICO deepen 5.19%. The oil and gas saw a lot of decline yesterday, mainly in Japan, which lost 8.3%, and of course O&O, which recorded the top losses yesterday in the market by 9.92%. The industrial goods segment of the market was the only company, or was the only segment of the market that was positive yesterday. Why was that? Because Dangote Cement has proposed some 16 naira by way of dividend, final dividend, apart from an interim dividend that has been declared earlier, final dividend of 16 naira, and of course posting some 390 billion naira in profit after tax. It has an 89 billion naira worth of tax credits given its pioneer status. Chimeze.
All right, Temple. Well, talking about all the major sectors of the market losing yesterday, except the industrial sector there, and that's because of Dangote Cement impressive earnings, just as you said. That brings us to the issue of the cement sector. Afrinvest Research has just published a new report titled "Cement Sector Update in Search of Growth Triggers." The report looks at recent trends and outlook for the Nigerian cement sector over the medium term. And with me here in the studio is the cement sector analyst at Afrinvest Research, Adedayo Bakari. Thank you very much, Adedayo, for joining us.
Good morning. Thanks for having me.
Well, Temple, I'm sure you would like to also be part of this conversation with Adedayo, but let me start off this conversation with him. Now, in your report, you mentioned that growth in the cement sector has been underwhelming of late. That's in line with the weak momentum in the economy. Could you give us a broad overview of the cement sector performance in the past 4 years?
Okay. All right. So in the cement sector, the momentum generally in terms of, say, volumes, tracks what is happening in the overall economy. So if the overall economy is growing strongly, like we had in the period between 2000 and 2014, then you would expect that the momentum in the cement sector would also be very, very strong. So basically, whatever is happening in the overall economy, the cement sector tends to track that. So for instance, in the period between 2000 and 2014, the economy was growing at around 7%, an average of 7%. In the cement sector, we saw a growth rate of double digits at 13.7% over that period. Now, post-2014, due to the oil price crash we had in 2014 and also the oil production crash we had in 2016. Now, the overall economic momentum has been weak. So in the overall economy, for instance, in 2015, growth slowed to 2.8%. In 2016, we had a negative growth of around 1.6%. And in 2017 and 2018, we've started to see a bit of recovery. The economy did 0.8% growth in 2017 and 1.9% in 2018. However, this is still very, very weak when you compare it into long-term growth rate of the economy, which is around 7%. So in the cement sector, we've kind of seen performance of companies also mirror what is happening in the overall economy. So growth in the past 3 years, for instance, has averaged a negative of 1.0%. So basically, the very, very weak momentum in the economy has affected growth in the cement sector. So
what would you say would be the major challenges facing this sector in Nigeria?
Okay, so I mean, with given what we've seen in the past 3 years, the major challenges has really been, the first one is weak economic growth, like I just mentioned. So when the economy is weak, the performance of the market, especially in terms of demand. So basically, demand for cement comes from public sector, that is infrastructure spending. So you tend to think in terms of how much is government spending on infrastructure in terms of their capital spending every year. So if capital spending is improving, then you expect that the demand for cement will improve. However, a much more larger demand comes from the private sector. So thinking of residential and demand in terms of households, having to build homes or buying mortgages, the real estate sector overall for both business and residential places. So when you think in terms of demand in this private sector, it has been very, very weak due to the recession we have and the very, very slow recovery we've seen in the economy. Also, you want to think in terms of the energy costs. So in terms of gas, the issues we had in 2016 where Niger Delta militancy peaked again. And you saw a situation where there were disruptions to oil and gas infrastructure. That actually affected the supply of gas to cement companies because they use, most of their plants are powered by gas. And also you have a situation where these gas are priced in US dollars. So when there was a devaluation of the exchange rate between 2014 and 2017, that imposed, a lot of pressure on players. Also, you want to think in terms of overall infrastructure spending in the market has been very, very weak. So government has been trying to boost spending, but when you compare it with what we should actually be doing, for instance, in 2017, government spent about 1.4 trillion on capex. In 2018, we expect it to remain around that level. Now, when you compare it to estimates based on the Nigerian's integrated infrastructure master plan, that we should be spending a minimum of 9 trillion per annum on infrastructure, then you know that demand is still very, very weak.
All right, Tempo, you're part of this conversation, and you have been following the market and tracking this stock in particular. You've been listening to Adedayo there. What do you have to tell him?
Correct. Okay, so, you talked about the compound annual growth rates that used to be around 13.7% between the year 2000 and 2014 until last year, 2018, before we had a growth of 4.5%, we were actually, the sector was actually growing at a negative of 1%. I'm wondering how that was able to rub off on the performance of Dangote Cement for the full year 2018 results that we saw yesterday or 2 days ago now, which has a 390 billion naira worth of profit after tax and almost a trillion naira now in terms of its revenue. Adedayo.
So absolutely, you've seen, what you've mentioned affect cement companies. So in 2017, what happened was, in response to higher costs of production arising from, during the recession, we saw a situation where there was devaluation of exchange rates and costs increased significantly. Market players in 2017 adjusted cement prices. Market players in 2017 adjusted cement prices by around 45% to 43,000 naira per ton. So what happened was there was an immediate response from consumers. So we saw a contraction in volumes from around 22.7 million tons in 2016 to around 18.6 million tons in 2017. So overall, the response to weak volumes was higher. The response to higher prices was weak volumes by consumers. So for the Dangote Cement, for instance, we saw a very rapid increase in 2017 in the revenues, and that was because of the price adjustment. They increased prices by around 45%. However, that was not driven by volumes, because volumes actually reduced. And we also saw pressures in terms of, when you think in terms of their operating margin, in terms of their net profit margin, we actually saw a slowdown. So there was a very, very heavy moderation between 2016 and 2017. Now in 2018, what we are starting to see, from the results which we saw was a recovery in volumes. So from the depressed consumer spending we saw in 2017 and 2016, we see that consumers are starting to recover. Demand is picking up. So in 2018, volumes actually grew by around 11%, which is very, very good. And what that is telling us is that demand is picking up again. So compared with the period in 2017 where we saw a contraction, the cement volumes picked up, and prices were generally very, very stable. So between 2017 and 2018, for Dangote Cement, prices only increased by 0.5%. So what we saw was a general stability in cement prices, while volumes picked up. And also, when you think in terms of what really drove the performance we saw, because if you think of profits jumping from around 280 billion to 3.90 billion, that's really aggressive. It's actually because of the tax credits they got from the government. So when you think in terms of the profit before tax, the growth was actually very, very marginal. So
having seen the results posted by Dangote Cement, should we expect similar results from Lafarge and CCNN?
Okay, for Lafarge, the company has faced pressures from heavy financing costs. So they had a lot of foreign currency loans, and due to the depreciation, finance costs was very heavy. But in 2018, we expect that there will be an improvement in performance, but we still expect that the business is going to make a loss. Now, speaking in terms of revenue, and of course, we expect that revenue will pick up for Lafarge, but the main pressure point remains the heavy financing costs, which have been restructured. So post 2018, that is in 2019 and beyond, we should see better performance. For CCNN, they just implemented a merger with Kalambina Cement, which brings its capacity to 2 million tons from 500,000 tons. So we expect that will support a very, very significant performance in 2018. What we've seen so far, up to 9 months 2018, we saw that profits have almost doubled. So for CCNN, we are expecting a performance similar to Dangote Cement.
Well, I guess we just have to keep an eye and wait for these other two companies to come up with their own earnings. Absolutely. So we'll just have to leave that conversation there. And Thank you, Temple. Well, we'll get back to you later on the show to tell us how the market is starting off the new month. For now, we'll take a break, and when we come back, we will continue with the agenda setting for President Buhari's new administration. To stay with us.